Beyond Meat is taking a beating after inside shareholders placed a deeply discounted secondary offering, but the company's sales growth has helped save Bunge's earnings this quarter. Go figure. Joining me now for the breakdown is Bloomberg's Kailey Leinz in New York, joining us there. Hey, Kailey, if you take a look at what happened with Beyond Meat, aside from the insider selling and the offerings, like what's their actual sales growth? How are they actually doing?
Yeah, the fundamental story is really looking pretty good. In the second quarter, revenue grew 67% on a quarter-on-quarter basis, and they lifted their full-year guidance to $240 million. That was up from $210 million, and that $240 million figure compares with sales growth of just $88 million last year. So we're looking at nearly triple the revenue in just a one-year period. Now, does that justify the company's 600% surge since it went public back in May? Maybe not. Analysts a little cautious, don't recommend buying, but they do recognize that the growth picture is really looking quite strong for Beyond Meat.
But also, the question becomes, competitors like Impossible Meat, for example, and how easy or low the barrier is to entry. What do you know about the competition at this point for Beyond Meat?
So Impossible Foods actually just got FDA clearance this week for one of their ingredients in the burgers that essentially is what makes it look like it's bleeding like real meat. So that broke that barrier to entry. Now is a direct competitor. Impossible Foods can sell their product in stores. And of course, they have partnerships with restaurants, but as does Beyond Meat. You had Hardee's getting into the fray this week. They have partnerships with Dunkin' Donuts, with Tim Hortons, for example. And so those restaurant partnerships, in addition to the groceries, really is where they can get the entry to the market. And the market is a really big size, Alex. I mean, you have Barclays estimating that this alternative meat market is going to grow to $140 billion in the next 10 years, essentially capture 10% of the $1.4 trillion meat market in general. So there is a lot of space, and it seems Beyond Meat CEO actually thinks there's a lot of room for peers here.
All right, Kailey Leinz, thank you very much. And one company that's really psyched about Beyond Meat is Bunge. Now joining us is Bloomberg agricultural reporter Mario Parker from Chicago. Hey, Mario.
Hi, Alix.
How did Bunge benefit so much from Beyond Meat?
Well, Bunge, ironically, a 200-plus-year-old company, invested early in Beyond Meat. They invested pre-IPO to the tune of about a 1.6% stake, and that allowed them to benefit this quarter in an otherwise really tough agricultural commodity market.
Yeah, no kidding. We have a chart here that shows Bunge's agribusiness revenue just kind of going nowhere this year. What's the hardest part about being a Bunge, about being, say, an ADM, for example?
Sure. I mean, I think it's exemplified by at least the last half hour. It's just a lot of uncertainty. Bunge, for example, was riding high earlier today. The share price was up, and immediately after President Trump's tweet about possible additional tariffs with China, that stock price took a dip. And so that's uncertainty is the biggest thing facing the industry, whether it's Bunge, whether it's ADM. Last week, Cargill, which is another one of their rivals, mentioned that it was going to review its business. So the word of the day is essentially them just kind of housekeeping and controlling what they can, the levers that are within their control, if that makes sense.
It does, but the other part of it is also sort of the African swine flu in China that could be good for these guys, and it could be bad. It might not come fast enough. Where do the analysts sit on that?
Sure. Well, initially it's going to be a little bit painful because, again, it adds yet another level of uncertainty to the trade, particularly in China, Asia, et cetera. And so initially, as China calls its hog herd, it has the largest hog herd in the world. As it calls it, you'll see a dip in the demand for soybean meal. But later on, that should, as China looks to kind of replace that protein, that should pan out for these companies.